The stock market has been all over the place in 2023, and with some of the most recent volatility, a lot of the dividend stocks that you and I love have been getting beat up like crazy. The S&P 500 Dividend Aristocrat Index is down around 3.11% year to date, but some of the single names have been beat up much more, which has definitely caused pain for some investors, but it has also opened massive opportunities for investors willing to weather the storm and brave enough to buy into some of these accidental high yielders. Now in this video, we're going to go through 5 different stocks that are not only offering a massive starting dividend yield because of the way that they've been trading over the last year, but also offer some massive potential growth from here, along with a very safe dividend safety score. So if any of this interests you at all, make sure to please stick around, drop a like down below, and subscribe for more future content like this. Now, before we go through all 5 of these different stocks that are currently offering a potential buying opportunity for long-term investors, for the long-term dividend growth investors that do have a long time frame ahead of them, let's say you want to invest into different stocks over the next, say, 10, 20, 30 plus years. If you look at the S&P 500 Dividend Aristocrat chart over the max time frame, you can see that there's only been certain times historically where there's relatively small glimpses of buying opportunities, and then from there, for the most part, the stocks continue to go up. Now, I say this to remind everyone that when the stock market turns red, when there are buying opportunities across the stock market, especially for high quality names. If we're not talking about blue chip stocks, if we're talking about middle quality or lower quality names, there's likely going to be many more chances to buy them up cheap in the future, as certain stocks don't really perform as well. But during times like now, when the market is seeing some dips and certain single names are seeing some massive pain, similar to that of previous crashes, it's important to take those opportunities when you see fit. Now, an actual real life example of this is something that happened to me in 2020. I purchased a bunch of shares of UPS during the 2020 crash at an average cost of around $90 per share or so. Now, UPS, even after being down quite a bit, is at $154 per share, so I am still up like crazy on my position, not to mention my yield on cost for UPS is over 6.5%. So because I was able to jump on an opportunity when it comes to UPS stock, for example, now I'll most likely hold on to these shares for the rest of my life because I have such a low cost basis and because my yield on cost is so darn high. So the first stock that we're going to go through that offers a 93 safety score on the dividend safety, which means the dividend is about as safe as it gets, but also is offering a massive starting dividend yield because of the way that it's recently been trading, and also offers massive growth ahead along with massive dividend growth. It is none other than ticker symbol PEP or PepsiCo. Now, PepsiCo has definitely been on my radar over the past few weeks, along with probably a lot of yours if you are a dividend growth investor. Now, this is because we are potentially getting a chance to buy into Pepsi at some of the lowest trading prices than we've seen in quite a while. Pepsi is currently trading around $160 per share, down around 10 or 11% year to date. Now, Pepsi's performance over the long term obviously speaks for itself, up 723 or so percent, and that's not even including dividends. But because of Pepsi's massive dividend growth and of course the way that it's been trading, the starting forward dividend yield is around 3.16%, which I get it is not the highest starting dividend yield, but of course just knowing the massive growth potential and the fact that Pepsi is a sleep well at night stock, if you will, along with the reality that Pepsi is most likely going to pay you more and more in cash flow from dividends as time goes on, considering over the last 10 years, Pepsi is basically paying out about double in dividends. Pepsi is by far on my watch list as of right now, and if it dips down any further, I will likely be adding more Pepsi to my position. Now, the next stock that's offering a massive opportunity, in my opinion, is PSA or Public Storage. Public Storage offers a 96 on the dividend safety score, which shows that the dividend is very safe. Public Storage also has had some massive dividend growth and has a starting dividend yield of around 4.54%. Now, I get it, not many of us really want to invest in boring self-storage spaces, but Public Storage has performed very well on the max time frame, up 2,600+%. And year to date, Public Storage hasn't performed that bad, but still is down around 3.56% and also is down towards the lower end of the 52-week range. Now, because of the massive dividend growth of around 50% over the last year and the drop in share price, PSA is offering around 4.5% starting dividend yield, which isn't the biggest starting dividend yield across the market right now, but this is also what I would like to call a sleep well at night stock. And Public Storage has had some massive dividend growth historically and will hopefully continue to do so. Another one of my favorite holdings that I've held for years now that's offering a potential massive buying opportunity is Kimberly-Clark or KMB, offering an 88 dividend safety score, or very safe, also offering just below 4% starting dividend yield. Now, Kimberly-Clark is a stock that I've owned on and off over the past 5 or 6 years, and as of right now, I do have some shares in my portfolio. But Kimberly-Clark is trading towards the lower end of the 52-week range at around $118 per share, but on the max time frame up 482%. Year to date though, KMB has seen some pain, down 13.3%, which means Kimberly-Clark's dividend yield is going to be much higher than the historical average at around 4% or more. Now Kimberly-Clark is what I would kind of consider a boring stock, a boring company that doesn't really move around that much, has a relatively low beta, but has paid dividends quarterly for many years now and has also been raising the dividends pretty consistently. If you're looking for sort of a boring 4% yielder that has a safe dividend, and that will definitely allow you to sleep well at night, KMB could be the perfect stock for you. The next stock that's been beat up a little bit as of recently that's offering a decently high starting dividend yield and a 90 on the safety score is GIS or General Mills. Now General Mills is obviously another high quality blue chip name that's currently trading just at almost the 52-week range low at around $62 per share. General Mills in the max time frame has performed quite well along with pretty much every other stock in the category, up around 402% historically. But year to date, General Mills is down around 25%, which is making the stock boast a massive 3.78% starting forward dividend yield. And keep in mind, it's not just that, GIS also has been raising their dividends very fast over the last few quarters. We're talking just a few quarters ago, GIS was paying around 51 cents per share per quarter, and now up to 59 cents per share. General Mills is definitely a good sleep well at night stock to add to your portfolio, and another one of those stocks that we might look back on and say, why didn't I add more when it was down so much? Now the last single stock that's offering a nice high starting dividend yield and a very safe 84 dividend safety score is ticker symbol LMP or Lockheed Martin. Now Lockheed Martin is a stock that I've owned and sold multiple times over the past decade. But Lockheed Martin has performed very well, up over 1100% on the max time frame. Year to date though, Lockheed Martin is down 15.9%, and LMT is trading very close to the 52-week low at around $388 per share. Now Lockheed is a little bit higher beta than what I like to have in my portfolio, which is why I ended up selling off the rest of my shares not too long ago. But with a nice solid starting dividend yield of now over 3%, Lockheed Martin is giving long-term investors another chance to get in on some shares and get a nice starting forward dividend yield with the potential for another nice sized dividend increase coming up very soon here. Lockheed Martin has increased their dividend pretty substantially once a year over the past 10 or 20 years. And Lockheed Martin has some massive dividend growth considering in 2014, we're talking $1.33 per share per quarter, and now in 2024, around $3 per share per quarter. So Lockheed Martin, along with the other names we went through in this video, like I said, could be offering a nice potential entry point for long-term investors that are willing to hold on throughout whatever comes next. So there we have it. Those are 5 different high-quality single stocks that offer very safe dividends and are currently undervalued. Not to mention all those different names for the most part offer some nice healthy dividend growth and also could offer some massive share price appreciation over the next few years. Now, out of all the names we went through in this video, Public Storage, Kimberly-Clark, General Mills, Pepsi, and Lockheed Martin, if you could only buy one for whatever reason, which one would it be and why? Comment down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.